How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for August 15, 2017. Here's the report that I just posted about a couple hours ago. And here's a snapshot of the data that was collected from the CFTC report. So you can take a look at that. And so let's get to it. Let's start by looking at the data that was collected for gold. So before we do that, let's just fix this the way I like it. There. Okay, so let's start. What do we see the institutions are doing with gold? So we have this green ERC candle here, this big candle extending upwards, and we see that the institutions were adding about 30,000 to their longs. All right. At the same time, they're closing off shorts, closing them from 97,000 positions to 89,000 positions. So bias is starting to become a little bit more bullish. You can see the coloration of the cells turning from the blue to the green. And if you take a look at net positions, we have a significant increase from 148,000 to 187,000 positions to the positive side. So definitely we're going to get a move to the upside. I don't think there's a question whether we're going to get that or not. Only thing is we still have this area here holding price downwards, so I do want to see that be taken out. More importantly, this weekly supply area. I'd like to see this be taken out, and then whatever zone causes that removal, I like to take a long from that area. So long starting to become aggressive, as you see by the coloration of the cell here, turning slightly red. So longs becoming aggressive, long bias starting to kick in, net positions getting up to highs that we've had previously. And so good signs that we're going to see more upside on this chart. Just a matter of getting those obstacles out of the way so we can get in long. Next we have oil. And what do we see with oil? So we're looking at this candle of consolidation reacting from the weekly area of supply, and also the weekly descending trend line holding the candles down. So what do we see? We see a decrease in longs, which causes, profit taking, which causes price to drop. And we also see an increase in shorts, which causes price to drop. It reacts to this area where we have already identified this area as being an area where the institutions added over 50,000 in their longs. So I had mentioned previously that since this was an area where the institution filled in over 50,000 of their long positions, it was most likely going to be an area that the institutions were going to use to have price drop in, so they can take another, so they can continue to add their longs, and that's exactly what happened. So we got price to drop down from that weekly area of supply into this area, and take a look at that candle, straight back up, filling in their demand. So it seems like this week there's a very good chance that we see more upside here. Now, I've just been waiting for this trend line to break and for this area of supply to be removed. Once that happens, I'd like to buy pullbacks for oil and ride this up here to this resistance area. That's what I'd like to do. So that's what I'm waiting for, and it looks like the data is supporting this. Okay. Green coloration of the cells, very strong positive 463,000 positions to the upside. Longs are aggressive, shorts are not, they're neutral. So all signs point to price moving upwards. Alright, US dollar. So what do I see with the US dollar? So I'm seeing something very interesting with the US dollar. So price has been sitting inside this tested weekly demand zone for 1, 2, 3 full weeks now, consolidating. Now, typically in a situation like this, if I was to, or if we were to believe that price was going to be rallying up from here, which is what my belief was, then what I'd be expecting at this point is for the institutions to do one of two things. They could be adding in longs and adding in shorts, okay, in preparation for a move upwards, only to go downwards again. So they'd be hedging shorts so they can get a better price, a better average price on shorts. Or they would be adding longs, closing shorts for profit taking, adding longs, and then waiting up here to fill in their shorts and then pile in hard with their shorts, close off their longs for a move to the downside. So I don't see both of those things happening. All right, like if you take a look at longs, they're cooled off and they've actually been reduced from 27.3 thousand to 26.6 thousand. You know, lots of time here to start adding longs. That hasn't happened here. Shorts still aggressive, although they reduced their positions by about 2K. That's not a big deal. They're still very aggressive. Coloration of the cells here, red. So they're bearish bias. The only thing here is that their net positions is not anything substantial. It's negative 2.1 thousand positions to the downside. So this is the one thing that is holding me in wanting to believe that price is just going to consolidate here, and then we're going to get this extended candle to the downside. Because I'd figure that if this was to happen, they'd be adding more shorts now, and they'd be getting these numbers higher because they're expecting a drop. So, but building an argument for longs from this area here to the upside, I mean, is very weak at this point. You know, the data is just very weak. It's not showing that this is going to happen. So very interesting to see what's going to end up playing out. I think there's a very good chance we see price continue to the downside unless these figures start to change, and when that's going to happen, I have no idea. What could potentially happen is, you know, they're just holding off for something. They're waiting for some kind of news, something in the markets to happen, and then last minute what they could do is maybe hold their shorts or close off their shorts slightly and just pile on hard their longs, because they're going to need to pile on in one way or another for price to go up. Obviously this tested weekly demand didn't hold enough demand to cause price to move up, so we're relying on them to make a move to see what's going to happen. If I had to make a guess and determine what was going to happen right at this moment, I'd say price is going to go up to this area here where we had about 3,000 positions short added last time price was here, and they'll probably fill in the rest of their short positions. We have the weekly 20 EMA here, we have a weekly trend line, fill in the rest of their shorts, and then we get a deeper penetration like that down. Okay, so let's go to the next one. We have the Aussie. This one's a good one. We're reacting to a daily demand zone here, dropping from a weekly supply. We have nothing to stop price from flying up to the upside right here. Longs are aggressive, and they were adding to their longs with this candle right here, adding to their longs. So that was the daily demand kicking in. Daily demand, they held 1,000 positions long that were filled. Short positions are cooled off. Overall positions are in aggressive territory. Bias is definitely bullish. Strong green sells here, 73%. And net positions are obviously bullish at a positive 59,000. So I have been personally waiting for price to get down to this area of weekly supply, simply being that we have the two candles on the monthly extended upwards. So usually when price drops, it usually gets respected by a one time frame lower demand zone. But like I said, we're reacting to a daily demand zone right now, which could end up holding price. It's very possible. Let's take a look at the Aussie chart really quickly. Just want to double check something. That weekly supply. So weekly supply took out there. So it's not the greatest area of demand. And why is that demand? Oh no, because of this there. So it's not the greatest area. So we have monthly trend line up, but the trend isn't up. But we have it respecting an upward trend line. Weekly hitting that, drop down. So daily could be enough right here. The daily could be enough of an area to propel price upwards. It could be. If we get that rally upwards on the US dollar though, then I'd expect this to happen. Just to come down here. US dollar hits the weekly supply and reverses. And this reverses like that. Same thing with the euro, right? We got that weekly demand area here. Got the weekly demand area here, and then price rallies higher. So it looks like that's what's most likely going to play out if I had to take a guess just by looking at the data and price action. Okay, so that's the Aussie. Next we have the USCAD. Now the USCAD, definitely they have a bearish bias here. Okay, so we're reacting from a 3-month demand zone that was responsible for removing a 6-month supply zone. Shorts are aggressive at 86,000. Longs are cooled off. Now, the idea here is that, the zone has been tested a second time. And if we were expecting a eventual move to the upside like this, we would not see shorts being aggressive. I mean, the drop has happened and we have reacted to the upside. So this should not be as aggressive as it is. It'd be aggressive as we dropped, sure, because you'd need to be aggressive to get this drop. But once we react to the upside, we create a weekly bullish engulfing. This should not be as aggressive as it is. So I want to see how it's going to react to this bullish engulfing here, because it may come up to this area here if the US dollar goes up as well, and then from here further downside. So I think that's probably what's going to happen. And I'm going to keep watching this one because this was a tricky chart. This was a tricky chart. The data for the CFTC report is what's really making me believe that price is going to eventually go lower, because for some time now I had the thought that we were going to see a reaction like this and then eventually break up to this area up here. Why? Because the 3-month demand zone was in control, right? And it removed this 6-month supply area. So extremely important zone, right? But if you take a look at the 6-month chart, we have a 6-month trend line like this, 6-month zone like this. This 6-month zone is a zone because it removed a 6-month supply area. What happens when a zone gets removed? A lot of times is the zone gets removed, price retraces back to the origin of the zone that caused the removal, and then breaks up. So looking at this tall green candle, boom, no close above here, boom, push down, and then a reaction, and then a push down, and going even lower, is telling me that price wants to drop down here. And when you look at the confluence of all the other major pairs, you'll see that on these very high time frame charts, you'll see the same thing happening. Bullish engulfings on 6 months, and they are, pushing price in the opposite direction. So let's get to the next one, USCAD, and the next one is a Swiss franc. Swiss franc, they got this monthly demand zone sitting here, but if price wants to rally, it could rally up here and then drop. It could. What are they doing with their positions? They've decreased their longs and decreased their shorts. So overall exposure very cooled, very cooled off, and bias is really nothing. It's neutral, so don't do anything. 1.1 thousand positions, net positions onto the positive side, so this is not strong enough to make any decisions. I'm not even really looking at this chart to make any trading decisions. It's just there's nothing there to see. Alright, so now we have the Euro USD. I didn't include the Euro in the title. Anyways, Euro USD, what do we see here? We see longs remain aggressive, although they were closed off about 11,000 positions. They also increased shorts, but that was because price retraced very slightly here from this weekly supply. So weekly supply was hit. So supply comes into the market, which increases the short positions, and longs get closed out for profit taking. So too early to decipher whether or not this is going to happen. I believe it's going to happen because we've had such a strong rally. We need some kind of a break. But we could just consolidate here on the monthly and then extend another candle before getting the drop. So that could happen too. So I'm going to wait and see. I do have position open on the Euro Japanese yen to take advantage of the Euro weakness that I was expecting. But I'm going to play it very safe this coming week and put my stops in place to bulletproof my trade and to protect my capital in case price wants to continue rallying upwards. I don't believe it's going to happen, but there's a chance that it can happen, especially when looking at the US dollar and seeing that there hasn't been any preparations for the last 3 weeks for them to take price to the upside. So that's a bit concerning, and I want to keep that on the top of my mind going into next week. So on the pound US dollar, we see longs increasing. We also see shorts increasing. That happens with this candle here. Longs and shorts increasing. What's happening? Hedging. So why are they adding longs? Because they want to fill in a bunch of their long positions. They want to bring these numbers up to a certain amount. So they're going to be filling in longs at every opportunity they have. Last time they added about 16,000 longs here at this weekly demand zone. So we were expecting price to at least test this area to fill in the rest of the demand that they didn't get a chance to fill in at these areas. And they're doing also on the way down. So they don't want to lose money on those longs as price is dropping. So what do? They add shorts as they add longs, causing price to drop, hit the trend line, hit the weekly demand zone, and then I think we're going to see upside like that. But I'm going to wait. I'm going to wait for signs of some kind of confirmation to happen for me to take trades long. By the time that happens, we'll have another report. I'd like to see longs continue to get stronger and show me signs that the price is going to move upwards. Right now we have slight bullish bias, even though we have a negative 31,000 net positions. Slight bullish bias. So again, looking for opportunities to get in long, but I'm going to be patient, waiting for the right chance to get in there. US dollar Japanese yen, what do we see here? Longs are aggressive but declining. 149, look at this, 164, 149, 148, 135, 120, declining. At the same time, we have an increase, 28, 36, 39, 43 in shorts. So right now, short positions are above average, and long positions are creeping closer to average. And we also have a decline in the long exposure and an increase in short exposure from 16% to 26%, and a big drop from net positions. So I believe what's going to happen is price is going to be dropping down to this area where we will eventually see more highs. So what's taking so long for the institutions to make their move? I think the uncertainty with the US dollar is what's been holding this off, but I think what we're going to see in the next coming weeks is a little bit more consensus amongst all these currencies, the majors and the US dollar, in the direction that the institutions want to take price in. And once we see the conviction that price is going to move downwards, I'm going to wait for this area to be taken out. Once it is, I'll be selling pullbacks to write it down to this area. Alright, we have the Kiwi. What's going on with the Kiwi? So just like the USCAD, I see something a little bit different on this chart after doing some more analysis today. And so let's take a look at the chart and show you what it is that I was looking at. Okay, so let's bring up the monthly chart. So here we have a 3-month supply zone that was responsible for removing a 6-month demand zone. So you would think, since it's so powerful, it should break that 6-month area of demand. Or sorry, since it was so powerful that it broke a 6-month area of demand, it should be respected and price should drop to the downside, right? Okay, so let's kick this up. What do we see on a 3-month chart? We see a very poorly formed area of supply, right? And really importantly too, take a look at the monthly chart. What is sitting inside that 3-month area of supply, right? We have this area here that was responsible for breaking this trend line, dropped, price came back, tested this area, and then dropped, right? So really, what is the core of this here? What is the core of this area? What does it represent? It represents an area that was supply, price retraced and hit the area of supply and then dropped. Okay? So yes, this was an area of demand, and this area eventually removed this area of demand, but was it this area that removed this area of demand, or was it the importance of this area and all the demand or all the supply being filled in here that caused this area of demand to be removed? So those are the things that I have to pay attention to when examining the validity of this area and this 3-month area, right? So now let's kick it up to the 6-month chart and show you what I see. 6-month chart. 6-month chart. We have a bearish engulfing 6-month supply zone. Okay, why is that supply? Well, because this area was demand. So what happens a lot of times when an area of supply removes an area of demand, it responds to a 1 time frame lower demand area. So let's see if we got that 1 time frame lower demand area. Yeah, take a look. So this area of demand, oops, what's going on here? So this area of demand, look at that, just fell short of it, and now we're getting that move to the upside. Just fell short. Just fell short. Yeah, look at that. So what do we see? So price supply breaks through 6-month demand, responds to a 1 time frame lower demand area, and now price is rallying up to this area. We have a 6-month bullish engulfing here, which is going to push price all the way up here to this area of supply, and it's from here that we'll see more downside. Alrighty, so what does that mean now for price? Well, it means that this area could very much hold price, and we can see price moving up. If the US dollar does rally up higher, we could see price dropping a little bit further before the rally. That's a possibility. But when you look at the data, bottom line is bullish bias, strong bullish bias. And you look at here, net positions, positive 24,000. Yes, they dropped over the last week. That's why we had this drop here into weekly, non 2-to-1 weekly demand. But we're in weekly demand, and bias is definitely bullish. So again, wait to see how the US dollar plays out from where it is, and then I'll be looking to take positions on this only after all this stuff gets taken care of. Because what's going to happen now is this is a lot of supply to get rid of. You know, we have a test here, a deeper test here, then we got to do another test, and then another retrace, and then breakthrough, and then we still have that 3-month area, and then we have that other tested area here. You know, so there's a lot to break through before a move to the upside. But eventually, when that stuff gets, all that supply gets eaten through, we're going to see an explosive move to the upside, and there might be a setup there to take to the upside. But until that happens, I'm not going to be looking to take any trades on this pair right now. If we get a drop down here, I'll definitely look to take confirmation trades to the upside, that's for sure, and I'll be taking profits on the way up, but holding for a deeper penetration up here as a final target. So I'll definitely be doing that, but if that's going to happen or not, I don't know. We'll have to wait and see what happens. Okay, so that is the report for this week. I hope you guys enjoy the rest of your weekend. It's gorgeous and sunny outside, so I'm going to take a dip in the swimming pool, and I hope you guys enjoy the rest of your weekend, okay? Take care.